Top 10 market news for week ending February 1, 2025. The week saw mixed results across the major indices. The Dow Jones Industrial Average managed to post a modest 0.3% gain. However, the S&P 500 dropped 1.0%, and the Nasdaq Composite saw a steeper decline of 1.6%. The Russell 2000, representing small-cap stocks, closed the week with a 0.9% loss. So, despite some positive movement from large-cap stocks, the broader market struggled. A major market mover was the news surrounding DeepSeek, a Chinese AI platform that became popular for being more cost-efficient than US alternatives like ChatGPT. This led to concerns about the future competitiveness of companies in the AI sector. One notable victim of these fears was Nvidia, which saw its stock drop 17% on Monday, marking its largest single-day loss in market capitalization ever. The question now is whether the DeepSeek model could challenge dominant players like Nvidia and OpenAI, which could alter the entire landscape of the AI industry. The week was also packed with earnings reports. Apple stood out with a 5.9% gain after reporting solid earnings. Meta Platforms saw a 6.4% jump, while Tesla saw a smaller decline of 0.5%. On the flip side, Microsoft faced a significant 6.5% drop following its report. IBM, however, had a stellar week, gaining 13.8%, signaling strength in its earnings. Companies like Boeing and General Motors had more muted performances, highlighting how mixed the earnings season has been. The Federal Open Market Committee, FOMC, made its decision to leave the federal funds rate unchanged at 4.25–4.50%. This was widely anticipated. Fed Chair Jerome Powell emphasized that inflation remains elevated, but the labor market remains solid, meaning the Fed is in no rush to tighten policy further. Powell mentioned that with economic growth still strong, there's no urgency to adjust the rate at this moment. This cautious approach is seen as a wait-and-see stance from the central bank as they monitor the data in the coming months. On the economic front, initial jobless claims came in at a very low 207,000, signaling a strong labor market. This is important because it suggests that employers are reluctant to let workers go, a positive indicator for the economy. Meanwhile, personal spending rose by 4.2% in Q4, the strongest growth rate since the beginning of 2023. This suggests that consumers are still spending, even as inflation remains a concern. Friday brought unexpected news that triggered significant market volatility. The White House confirmed the imposition of 25% tariffs on Canada and Mexico, and 10% tariffs on China, effective February 1st. The basis for these tariffs includes issues like trade deficits, immigration, and fentanyl. While it wasn't entirely new news, the official confirmation led to a rush of selling in the markets, as investors fretted over the potential for an escalation in trade tensions. Treasury yields were volatile this week, with the 10-year yield falling by 6 basis points to 4.57%, and the 2-year yield dropping 3 basis points to 4.24%. These moves reflect the uncertainty in the bond market as traders reacted to the FOMC decision and the tariff news. Bond yields are often seen as a signal of investor sentiment, and the movement suggests that while there was no immediate cause for panic, markets are on edge. One of the key takeaways from this week's economic data was the continued persistence of inflation. The Core Personal Consumption Expenditures (PCE) price index, the Fed's preferred inflation gauge, came in at 2.8% year-over-year for the third month in a row. Despite some signs of economic strength, inflation remains above the Fed's 2% target, which is likely to keep the central bank cautious for the time being. The market's volatility was particularly evident on Friday, with stocks rallying early in the day before taking a sharp downturn following the tariff announcement. Despite some initial optimism, uncertainty surrounding the tariffs, along with the lack of clarity over the specifics of future trade negotiations, caused investors to pull back. This late session sell-off served as a reminder of the volatile nature of the current market. Lastly, data from the Bureau of Economic Analysis showed that personal income rose by 0.4% in December, while personal spending increased by 0.7%. However, inflation remains sticky, with the PCE price index rising 0.3% in December. This signals that while consumers are still spending, prices remain high, making it clear that the Fed's fight against inflation is far from over. Conclusion: in summary, the week was filled with mixed earnings, cautious Federal Reserve actions, concerns over AI competition, and heightened trade tensions. While consumer spending remains strong, inflation continues to pose a challenge, and uncertainty surrounding tariffs added to the market's volatility. As we look ahead, investors will be closely watching any further developments on the economic and geopolitical fronts, especially with tariffs set to take effect in February.